JB Knowledge Podcast Network. On episode 78 of the InsureTech Geek Podcast, talking about InsureTech for the middle market, AI sales enablement, and more with Jackie Vergne from Vergne Advisory. The InsureTech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Happy Friday, everybody. Of course, we record this, it's Friday. It's going to be Thursday when you actually get this published out to the podcastosphere. But greetings and salutations, of course, with me, my illustrious co-host, Rob Galbraith. Rob, what's up, buddy?
What's happening? Just another day in paradise. We call Texas.
Yeah, you know it, man. Tell you what, we got crazy cold and windy yesterday. It was not super pleasant. I was landing in it last night, and it was challenging because it was super cold and the winds run straight down the runway were 15 to 30 knots, which means it was one of the fun ones where you're having to do a lot of work while you land. But it was all good. I got to go out to San Diego, which is a German town. If you didn't know that, it's not German. Sorry, I'm just obsessed with Ron Burgundy. I was out in San Diego this week. Weather was 72 and sunny the whole time I was out there, of course. Got to speak to a conference out there. Got to hang out this week as well with a bunch of YPO members talking about InsureTech. There are about 35 of us I'm a YPO member, and got to hang out with a bunch of insurance CEOs this week, just geeking out on InsureTech. So it was kind of a busy week for talking about InsureTech, Rob. It was out there on the virtual talks.
You just said you're out with the man on the street, kind of the microphone,
Yeah.
At events like that.
Yeah, exactly. I need to just do on the spot interviews with people. It was a good week though. With us today from New Jersey. Sorry, I'm obsessed with Saturday Night Live, and that's how they always say New Jersey, Jackie. So Jackie Vergne with us. Jackie, what's going on?
Thank you for having me, Rob and Jim. Certainly appreciate it. Very glad to be here.
Yeah.
Yes, I am from New Jersey, very close to Manhattan. And like you said, we had some crazy weather. We lost power. So
Yeah.
I was up at 3 a.m. It was nuts. I had alarms going off. But thank God I have a generator.
Yeah, right? Yeah, generators are a lifesaver. And of course, we learned that the hard way here in Texas a year ago when we had we called it snowpocalypse or snowvid. It was ugly, but for people in New Jersey, it's like another Saturday. I mean, although I saw the weather radar for what was rolling through your neck of the woods, and it was ugly. So I'm not surprised you lost power, but I'm glad everything's okay.
Yes.
Now Jackie is joining us from New Jersey, but we're gonna geek out on InsureTech with her today. We're gonna have a lot of fun talking about all the different stuff she's been working on. We're gonna talk about her. Before we actually do, I just want to remind you out there in listener land, if you're watching this on our live video stream on LinkedIn, on Facebook, on Twitter, or on Vimeo, those are the 4 places you can watch the video, and you want to subscribe to the podcast, which is the audio version, you can text Geek Out. That's GEEK, Geek Out to 66866. So text Geek Out to 66866, and you can never miss an episode. We'll send you the show notes, and we'll email in when the episode drops. We'd love to have you subscribe to our email newsletter. And back to our special guests. So Jackie, before we talk about your company, let's talk about you. You're from New Jersey. You got undergrad, a master's. You got a doctorate in business administration. So we should call you Dr. Jackie. And you've worked in insurance for some time now. Started out in the exact same place I started out. You started out at State Farm. I started out building a a web application that State Farm used to order insurance inspections on houses. So you and I got and State Farm was my very first insurance agency ever. Whenever I first started buying insurance, so you got to start there, and you were there for about 15 years, and then you moved through Fireman's Fund, went to Selective Insurance, went to Chubb. You spent a couple years over at Duck Creek. They're having their formation conference coming up in March down in Orlando. By the way, if anybody's going to formation in Orlando in March, let me know. And then you went to Swift, Franklin Mutual. So you've really done some interesting rounds out there in both insurance companies and InsureTech. What got you interested in insurance in the first place? Like if you wind back to 18-year-old Jackie, she's at William Patterson University as a freshman in New Jersey. Like, what's she dreaming of doing, and how'd you wind up in insurance?
Yeah, great question. I fell into insurance by default, which I think a lot of us do. State Farm was right down the road. I lived in Wayne. I was going to William Patterson in Wayne. I was going at night. And State Farm was right down the road, and I went in. And I think what most people will probably tell you, or insurance it's complicated, it's intellectually intriguing, and it's safe. It's a position that you're always going to have a job in insurance, because insurance is necessary. It's needed. Everybody has to have it. So it's not something that you're just going to kind of swing by in. And I wound up loving it. Yes, I mean, there are some pieces that can make it very boring, contracts and things like that. But you've got to make it fun, and you've got to figure it out. There's a lot of risk involved. There's so many different departments and different places and different things, and you could just have such a huge impact in it. So I fell in love with insurance. Insurtech more so, just because I like the whole digital space. I love, the fast pacedness that it goes towards. I find it very innovative, very exciting. So I definitely like the Insurtech side much better than the insurance, company per se.
So what was it about? Like you spent 15 years at State Farm, and you
Correct.
obviously learned a lot there, and
Yes.
then you worked your way up through a bunch of other insurance companies. Like, what were some of the big takeaways for you? Like, what in insurance really geeked you out? Like, even outside of technology, like what did you really like about it, and what did you really focus your time and energy on, special project wise?
I think for insurance, for me, I think you feel safe when you have it, and you know that you have the right amount of insurance that you need. I think what I also like about it is, from I'm, on the corporate side, I was much more on the operations side. So to me, it was really just making sure that everybody felt good about themselves, and they had I mean, it's a huge responsibility, making sure that everybody had the right amount of insurance that and again, I'm going to bring up errors and omissions, because you need to make sure that no one's going to get sued, and that you really have your due diligence on every single customer. So I think if you can make somebody feel good, you can make somebody feel safe. That's important. It's important to have, and really just to make sure that everything is covered. Going over all those gaps, last thing you want is any level of gap in coverage. So that to me is just something that I enjoy doing, for everybody.
Yeah, Jackie. So it's so great to have you on. We had
Thank you.
the privilege of connecting with each other back in 2019 when you were with Aureus Analytics, and
Yes.
it's kind of a funny story. So I think I just put like my business card in, where I was visiting a booth. I think it was at InsureTech Connect, and one of those
Mhm.
raffles, right? Leave your business card, and you might win a prize. And so I actually happened to get picked for the prize, and it was a set of noise canceling headphones, super high end, very very nice. And so you guys reached out, you let me know I was the winner, and the headphones came, and I'm excitedly taking off the shrink wrap, opening the box, unzipping the case, and then I was kind of stunned to find a pile of rocks. and I couldn't understand what was going on. I was so like confused, and I reached back out and I kind of let you know, hey, thanks for the headphones, but there were no headphones involved, and I think I sent you some pictures, and you and your team at that time were
Mhm.
just so kind, and had said, very apologetic, and it did send me a new pair that actually did contain headphones, and I still use them to this day. Even my daughter, who is in sixth grade, she will use them on a daily basis when she's doing her homework, and then I love them for the airplane or whatnot. But yeah, it was just kind of a funny surprise that initially connected us.
Yes, it was the moon rocks. So every time I think of you, I think of a pile of rocks. Yeah, that was embarrassing, but it was actually really quite funny. And I'm glad in the end we were able to give you what you needed. God, I mean that just goes to show you. You try to order something on eBay and forget it. You never know. So we got scammed.
Well, I had to laugh because somebody like must have figured out how many rocks to put in this thing to be pretty much the exact weight, and then it was shrink wrapped. Like, this wasn't, it didn't look like it was something that you bought secondhand or something from a garage sale,
Oh
whatever.
my
I mean, it looked totally legit, and so, whoever's packing it wherever, right? Anyway, so
yeah,
but
that
I,
that
hey,
that was fun.
it definitely makes an interesting story, and I always kind of think of that. And so we, kind of recently reconnected, and so
Mhm.
thrilled to have you on the podcast. You mentioned kind of your career on the carrier side,
Yeah,
and that's been the bulk of my career as well. I know you also have exposure to the distribution side. You yourself are a licensed agent, even though you don't serve in that capacity, but you
correct.
certainly advise companies and know that. So you have such a well-rounded background in the industry, and as you mentioned, you have been now advising insurtech companies over the past several years. So I would just love, like, what is your reaction to kind of insurtech in general, and are there particular areas that you're really excited about it in terms of changing the insurance industry for the good?
God, it's interesting. Like I'm never surprised. I think what I do love about the InsurTech space is again, it's so fast paced. You never really know what's going to happen. I think when you go to like the InsurTech Connect where we met, it's that's probably my favorite part of the year. It's like every year you go, and what I love about it, it's like you don't sleep. It's not like I'm out there getting drunk but like literally it's just so stimulating and it's so overwhelming and exciting because you're meeting thousands of people globally all over the world. You're meeting the brightest and the most intellectual people all over. Your millennials, your centennials, these are the people that are kind of taking over this space that we have to adapt to. So I'm never really surprised, but at the same time, I find it so exciting. You're looking at robots and you're looking at drones and you're looking at telematics and you're looking at all of these different areas. And it just, there's no surprises. It's just extremely stimulating that I just love this space that it just gets more and more exciting every day. But I think what's really happening again now with this whole landscape is, again, I hate to talk about COVID, but obviously it's still here and it's here to stay, I guess, for a little while. But there's still, during that time, people thought that they were digital and they weren't. So they're still sort of, trying to figure out, with the carriers and the companies are a little bit slower and they're methodical and they're thinking on, how they're going to go about it. And they're, not so savvy when it comes to the tech side. But I think, there's so many different areas that need a lot of change. And becoming more digital, you're eliminating those gaps and you're becoming a lot more efficient. You're becoming more cost efficient. You're eliminating gaps on errors and emissions. Which again is my pet peeve. You're developing a lot more new products. I mean, everybody has a different issue. You try to customize, you listen to these customers and you try to customize some products, whatever their low hanging fruit is, and what we could do, whether it's from a sales enablement, to try to get them to, figure out when they should be selling something or when is a good time to offer another product or retaining that customer. And as you know, I mean, retaining a customer is truly probably the most critical component in insurance is retention and retaining a customer. Losing that customer over years is far worse than the new business cycle, the new business you need as well. So I think I think there's just a lot more exciting times. I think the growth is just going to continue. More people at home. You're dealing with cybersecurity. You're dealing with other issues that I'm seeing more and more so now. The audits, the compliance, and those pieces as well. So there's just so many different areas and so many different pockets I think that we can really fulfill. So this is a great time for the Insurtech space, I think, more than ever.
We had a healthy discussion on my one of my talks recently about what Insurtech even means, like what the word even means, because we've used technology in insurance for decades now,
Yeah.
and insurance was really a prime mover in the use of computers, just in general, right? I mean, they were fairly early adopters. It's always interesting to me when people say that insurance is lagging behind other industries because actually it's straight on average. The easiest way to look at that is the Gartner spending index, where they index the percent of revenue spent on IT by industry. Average is 3%. Insurance is 3%. The one that's actually the laggard is the other industry I've spent a lot of time in, that's construction. They're at 1% of revenue spent on technology. And so they're truly last place. Like they're bringing up the rear on spending. But insurance was pretty early. But actually, that's one of the big problems that we've identified in all of my discussions recently is that because they were early movers and they bought the mainframes, they implemented COBOL systems. A lot of them are still using those. And it's actually the early innovations holding them back now because it's not scalable, programmable, accessible anywhere. It's not cloud-based. It's not web-based. They're still using legacy desktop and mainframe-based AS400 systems. And so it ends up being a bit of a problem. So then we tried to define, okay, well, if insurance has used tech for a long time, like what the hell is InsureTech? And I would argue that it's a radically different user experience. That's one of the things I think is a hallmark, right? Like it's radically different user experience, dramatically streamlined, leverages big data, uses AI and machine learning. One of the things that you promote on your website, and is AI enabled sales. So, or AI sales enablement. So why don't you talk about that for a second? What that really means? Like, what does it actually mean for the end customer, and who is the customer?
Okay, great. I mean, so it's interesting how you mentioned InsurTech, but basically we're trying to make insurance companies into technology. InsurTech, insurance and tech. Sales enablement really is gathering and compiling. It's great if you can get 2 to 3 years worth of data so that we can get some sort of historical background. Not always necessary though. And the reason why I say that is because we can, whatever company you're working with or for, you start to collect data from all over globally. So you kind of have an idea of nationally, geographically, statewide, territory. I mean, it really, really, you can really go down to the nitty gritty of just about everything. Almost like working for the FBI agent. It's that fine tuned as you start to collect. So if you can collect the data from another company, that's fabulous. Again, it's not always good data. You hear the term all the time, GIGO, garbage in, garbage out, but you still try to fill in those gaps. And as you start to collect data, it really what it does is it starts to predict. So a great terminology, even if I went down to the consumer level, if Rob ate Chinese food at a certain restaurant, maybe Hunan taste, I don't know, every Wednesday, and it was consistent, I probably could predict that if Rob did not go without Chinese food in the next 2 weeks, probably by that third week, he would be going back to Hunan taste. So these are the type of things that you start to collect. So you start to predict that behavior. Very similar to like a sales enablement. When you start collecting data, and if you really go down to it and you start collecting other information, let's just say if you're starting to collect some social information, let's say people are posting things on Facebook or some other realms, you'll start to identify whether or not what they're buying. Let's say they're purchasing a boat, or they're jumping out of an airplane. You're starting to pick up these collective things, which allows you to then reach out to that customer and say, hey, not sounding like a psychic or scaring the crap out of them, but you start to determine whether or not, as you're collecting this data, there's sort of ways to kind of go around it as you're doing, say, a personal insurance review, so to speak. And you start asking those questions, probing them so that you know that you can at least get the insurance on some of these pieces. So the sales enablement piece, really what that does is it sort of fills those gaps as people are buying things, and it starts to predict the behavior of individuals, groups, territories. Another example is, let's just say if you live in an area where there's a lot of water, probably where there's a lot of water, there's probably going to be a lot of boats. So again, it's, someone doesn't have a boat or a jet ski or something like that. You can pretty much predict that somewhere along the line, especially as they start having kids and so forth, that they probably would, that would be a question you would ask. So again, you would kind of fill in that gap.
Fair enough. What specific technologies are you implementing to do this? Like, are you working with a suite of InsureTech startups? Are you actually building your own tech? I mean, walk me through the details.
Mhm.
I understand. I get the big picture here,
Yes.
but how are you actually enabling this at insurance companies?
So it's some of them use their own, data scientists, to sort of build this out. And then others, there's a whole other area. It's called enrichment, which really sort of enhances it. On the enrichment side, you definitely need to, work with some other companies, such as like a Syngsor or something like that, where they have additional data that you can collect, um, to really sort of fine tune certain things, getting specific records or specific social consumer information. There's a lot of protocols, that kind of come with this as well, because you can't just sell this stuff off. Like, you really have to worry about the privacies of the consumers. But it really can get very, 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 very deep. So these are just additional services that you can kind of add in addition to what you're collecting. So you can get your unstructured and your structured data. You collect all of that information. You sort of build that out, that technology, and then you enhance it.
Yeah, so the sales enhancement and like use of AI, machine learning, and others is kind of exciting and cutting edge. And I think about the insurance industry. It's very much zero sum in a lot of ways, like auto insurance in particular, right? There's so much advertising on TV, and you're absolutely trying to steal customers away from one another. I know
Mhm.
areas like life insurance as well have been a major challenge. But you mentioned a couple of times the other side of it, errors and omissions, or E&O. And
Right.
this is a really important concept that we really haven't talked about on this podcast. And there's probably not a lot of content out there. And so I'd love to have you provide our listeners with just a broad overview of what is E&O, why should they worry about it? And then are there any trends that you're seeing in this space, either good to like help with this challenge, or maybe some negative trends that are things to be on the lookout for?
Great question. E&O is my baby. My favorite line of business is is your umbrella policy, and it just seems to lack in a lot of different areas. So E&O is errors and emissions, and there's huge responsibilities for people in insurance company as well as your agents that are licensed, to make sure that they're rounding out these accounts and there's no gaps in coverage. A prime example of a gap in coverage would be you have to have very specific, you have to have certain limits of liability. For instance, if we have a house, of course, a lot of people don't own that. People that don't own that home have to have a mortgage, and there's certain requirements that they have to have, certain liability limits, etc. Once you reduce those limits, that becomes the gap. Auto insurance is probably the bigger one. If I'm talking personal lines, I'll talk personal lines to keep it on a smaller scale. But on an automobile liability, again, you typically, if you have an umbrella, you have to have 300,000 in liability before you can have your umbrella policy, which would cover $1 million if somebody gets sued or someone winds up in an accident. Um, if somebody calls in and they reduce that coverage to say 100,000 to save, I don't know, $20, $30, then your umbrella policy is now no longer, there's a gap. So what does happen, let's just say if you have an auto with, I don't know, State Farm and you have your umbrella someplace else, say Chubb, whatever, any other insurance company, they can't see it. The agent can't see where there's a gap in coverage and that somebody just reduced their liability limits. So if somebody winds up in a car accident and they get sued, before that umbrella policy picks up, if it's down to 100, they have to pay $200,000 out of pocket, which a lot of people don't typically have. So that's a major, major concern. So that umbrella policy will not touch until they pay that 200,000. E&O really just comes in many forms. That's just one small example. It happens all the time, more than we would ever want to hear, but it's the scariest thing. Insurance companies get sued millions and millions of dollars. Agencies will wind up being completely wiped out because they can't afford it. But errors and omissions is a huge component. More so when you're doing like an AI or an ML enablement or even a sales enablement, you really need to find a way to make sure that there are no gaps in coverage. Somebody may steal one line of business, but if you don't keep it all together with one carrier or one company, you can't see all the lines to make sure that everybody has the proper insurance that's needed and necessary. And that's why it's really important to kind of keep it together. So when you're dealing with sales enablement or really with any other line of business, you really want to do your best to make sure that you're keeping it all together. People often will try to save money. Again, I'm not putting anybody, let's just say if you go with a Geico, they say that they have these great rates, but let's do apples to apples. They may say, all right, I just saved $700. Great, that's fantastic. But let me take a look at that deck page and compare exactly what coverages are. And I can guarantee you that there's other areas, there are other, endorsements that are maybe not added on, or, maybe it's not replacement cost, it's, depreciation. There could be some other pieces that are not on there. And that's why it's so important. It's such an important role as an agent to make sure that you're looking at all these pieces. And that's where your AI and your ML can come in, because it helps eliminate the gaps from an efficiency standpoint to make sure that you're filling in all these areas if someone's not doing their job or, they missed something. So therefore it can give you like a hit or, an additional question to make sure that you ask to make sure that those gaps are not, handled, and you're creating a hole,
Well,
so that someone doesn't fall into that realm and someone winds up getting sued.
well, help me understand how you're doing a gap analysis with machine learning. Are you actually spinning up a machine learning model and putting in historical data and then looking at current? Because a lot of this sounds like it's just a giant if-then conditional statement where you're just saying like, if this policy limit it hits this level and the next one is at this level, then you've got a gap between your primary coverage and your excess. That's
Mhm.
not machine learning, right? That's just conditional statements. Like, help me
That is
understand
correct.
help me understand how machine learning specifically is solving a problem that a if-then conditional statement can't.
That is correct. What you would do is you would actually create a rule. So once you create a rule, it's sort of a hit or an edit to make sure that that's there. From a machine learning standpoint, what you could do is you could really kind of analyze the data that's behind there. Let's say if somebody winds up with a claim, you could pick up the claim activity, you could pick up what's missing. So that's where that would come into play.
So, are you working with a specific vendor on this?
Yes. I mean, at times you do work with different vendors, and at times you're just working with the scientist that helps build it. Some of these things are more homegrown. Some of
Uh-huh.
they can build their own stuff, but oftentimes they will use other vendors to gather and collect information where
Okay.
the pieces are missing.
I originally done some work with Gradient AI, who is a spinoff of Milliman, right? And
Mhm.
and
Right.
Gradient does a whole bunch of data processing on claim data and gets into reserve setting, right?
Mhm.
And so they'll go in and do recommended reserves, and they look for correlation and causality. So they use a machine learning model that digs through millions of historical claims and looks for contributing factors other than the obvious stuff, right? The obvious
Right.
stuff is comorbidity on a work comp claim, for
Mhm.
example, right? And then they'll peel through the current claim data apply the model that they ran on the former claim data, the stuff that's closed, because they know the outcomes, and then they start making recommendations on suggested treatments or a recommendation on a
Yes.
reserve change that needs to be made. Then, so that's how they're using, machine learning in that particular case. That was something that you couldn't explicitly program into a conditional statement because there were just too many data points. You're analyzing 65 to 100 data points across 50 million claims. It's very challenging to manually program that. And
That
so
is
that's
correct.
why we've built machine learning models to do this. What do you think the end result of all this is going to be in insurance companies? Are they going to actually make better decisions? Are they going to drive their underwriting profits up? Like, what do you think the real benefit is, other than the fact that they're using cool technology?
A great question. I think again, if insurance companies don't learn to adopt some of these technologies, they will be under in no time because the profitability will continue to drop. Or they can just make a decision. Workers' comp is a perfect example. Workers' comp is not really a very profitable line of business in many scenarios, but you have to find out what's the underlying reason why it's not, what specific categories are not. And then that's where machine learning does come into play as well, because you can really make the determinations and set the proper pricing s- so that you can become profitable. Um, there's a lot of other things that you can do even from a claims perspective. I mean, it's all about becoming more profitable. So if insurance companies do not adopt this technology, they're either going to make a decision not to take on specific lines of business and completely eliminate it to a certain degree, um, and then they're not going to be in the competition of others. So I think it's going to be a very interesting mix. But I do know that, it is such a hot spot for a lot of companies right now. I think a lot of carriers are realizing that if they're not there, they're behind the times. They're really trying to find ways to be more efficient, and sort of adopt some of these strategies.
So, Jackie, I'd love to talk a little bit about APIs and kind of the platform ecosystem approach and their ability to spur innovative new products and micro insurance and elsewhere. I know that's another area that you're passionate about.
Right. I mean, I can't tell you a whole lot about it. I do know that there's a lot of SaaS models out there. There's definitely a lot of you have your integrations, which makes it very simple. There's I think what I find is when you go again to a lot of these technology or your ITC and some of your other events that are out there, you realize, there's so many other interesting models that they can integrate to help, fill specific pockets of, especially if somebody has a niche market, um, finding some of those niche holes to fulfill some of these areas, which, again, we're seeing more and more of as well. There was an
Yeah, and you
interesting
mentioned.
Yeah, there was an interesting one. This one was on the fintech side. Someone again, kind of looking for funding, but this model or what he's looking for specifically is on the fintech side. This one is it's sort of like eye and voice, as well as hand type recognition. So therefore, if you don't have your credit cards or any information in front of you, it still has the ability to kind of pick up to see and know who you are, so to speak. So there's a lot of other little niches out there, that are also very interesting, depending upon, again, you have a lot of specialty companies out there and some real niche markets. So I think that's also a very interesting area and dynamic that's out there. You don't hear about them as much, but you will as you get into more of the specialty lines.
And just as a follow-up, Jackie, would love to have you talk a little bit about your advisory firm and the type of work that you do. I know that you obviously, are on the advisory board of several companies, and I also know
Right.
that you can help companies link to funding if they're looking for that. So maybe you can just tell us a little bit about your advisory firm and the services that you provide.
Great, thank you. Yes, so it's Vergne Advisory is the name of my firm, and it's really a bunch of things that I can do. So from the consulting standpoint, I can help fund different companies, particularly startups, is really sort of my niche. And my favorite, of course, is, we could do a broadcast with 43,000 accredited investors to help with the funding, which is global. I really, I'm working on a big case. I also help some cases when it comes to very specific contracts. If there's an E&O exposure, I have a huge one coming up right now. And they're probably going to be sued for $2 million at this point. They've been out several $100,000 due to, a broker giving bad advice and not having the proper coverages. So it's really a combination of things. I am on a board of several companies. I'm an advisor at Refocus AI, and that's where I help them with their sales enablement. So I really handle everything from, but again, really more of my niche is on the startup side, consulting, anything insurance related for the most part.
Awesome. Great. Well, thank you so much for joining us today. I really appreciate it. Before we go, Rob, I know you have 2 news stories today.
Yeah, I do. So the first is actually a follow-up on our conversation with Peter Grant from SafeSite, and we talked about the relationship between Foresight, the MGA, and SafeSite, the technology platform, and we talked about them raising their Series B. Well, there's an announcement in Coverager this week that they are announcing the expansion of their appetite to include 4 new codes. So they're serving customers in agribusiness, construction, and manufacturing. They're going to janitorial, poultry farming, dairy farms, hog and sheep farming, and stock farms. And so it's just going to allow them to kind of expand their underwriting appetite. So just kind of, it's fun to see the progress of the technology, the MGA piece, getting the funding, refining the platform, and then being able to expand to new markets. So congrats to the folks at Foresight, and we'll continue to monitor their progress.
Started as just a construction safety app and turned into something much more than that. So it's good to see them spreading their wings to poultry, and of course other businesses other than that I don't have dad jokes for, but it is a really great business. Obviously, we had Peter Grant on here, who's integrally involved in Foresight, and I would expect to see more companies like this coming up that start as tech companies. And we've seen this before. They start building tooling, they go to MGAs. Of course, some end up try to be an MGA and they go back to building tooling for brokers. There's a good back and forth on this whole thing, but we'll see how this one turns out. But I am excited to see they're expanding.
The other one I've got this week is from Insurance Journal, and it's actually a study that some folks in the UK did that suggests that flooding losses in the US are going to reach $40 billion by the year 2050. So this is about a 25% increase over the risk today. And again, tied in with climate change, tied in with sea level rise. I think this has been a focus for a long time. So just, kind of one more study that's focused on this issue. We've seen a lot of development in the private insurance market going beyond what the National Flood Insurance Program does. We know a lot of agents and brokers are actually prefer selling the private insurance products where they apply for flood. We've talked to folks like Jim Albert from Neptune Flood and others. So I think those guys are going to be in business for a while, just because the risk of flood continues to ever increase.
Some articles have said that some scientists predict that the southern third of Florida will be underwater by the year 2100. I don't, that you could also say that the sea level in Florida has risen about an inch per decade. So I don't know if an inch per decade, if 10 inches over 100 years results in in the southern third of the state being underwater. But it's been interesting. We there's so much talk about climate change, and there's so much talk about rising sea levels, and so much talk about increased severity of weather. But we still haven't really seen the insurance market react to that in a material way, right? I mean, there's still insurers going into Florida. They're still insuring buildings. It's they're not placing that. The other ones that I'm really looking, of course, is all in like the financial services industry. The insurance companies, they have some long game that they have to stay on the hook for, right? But they can just, they can non-renew and they can step out of the state and they can say, hey, look, this is no longer at risk. The ones that are really on the hook are lenders. And so that's the ones that I think are really interesting when you start talking about 30 to 40 year projections on on sea level projections and on severe weather projections, because the lenders are the ones that are really on the hook for 30 years as they write these 30-year notes, right, Rob? I mean, it would stand to me that if the financial
Well,
services
unless they
industry,
get the federal government to buy it or the securitized loans, like there is somebody at the end that's holding the bag. It's just not always clear who that person is.
yeah, like I just wonder, like, at what, there were 2 days ago, and this all comes up because you mentioned, climate change, right? This is about pushing flood losses, and we're talking about, the amount of rain and the amount of sea level rise. So you have kind of two things: is the rain that comes down, and then like if the ocean's actually coming up. And there was a report 2 days ago that said that the sea level could rise a foot by 2050, which would defy the 1 inch per decade that another agency said that we're going to experience. I don't know. I'm not. So it's the year 2022. That's literally inside the 30-year window of a mortgage, but I'm not seeing any material change in mortgage underwriting in Southern Florida to account for a sea level rise of 1 foot by 2050, because they're writing notes that go out past that date, right? Like that's what has me kind of questioning, who where the bets, because you have to look at where the bets are being placed, right? And you kind of wonder about that, don't you, Rob?
Well, you do, but on the other hand, right, that person that is approving that mortgage today is probably going to be long gone by the time it's an issue. So, like I said, I mean, this is a game of musical chairs, and the chair is not going to be there for somebody when the music stops, but it's not always clear who that person is, and so therefore the system kind of continues unless there's a crisis, which is I mean, I think the old Rahm Emanuel, right? What is it, like a crisis too good an opportunity to waste or something like that?
Yeah. Well, no.
Is the quote. I'm butchering it.
Don't ever waste a good
it'll
crisis.
take that
right?
to see change.
Yeah. You mean it's funny. You mean humans are going to behave like humans and not think beyond the lifespan of their career? Like if something literally extends beyond the job they're going to have, they're not going to worry about it. Oh my gosh, no! I mean, people would do that. It's interesting. We'll see. We're going to get closer to these horizon dates, and it's going to get more and more real. And so it's at some point the insurance and financial services markets are going to have to react to all this in a material way, like stop writing loans in certain areas and stop writing buildings and stop insuring buildings. And so I just we'll find out. We'll find out. It was a good conversation, and I really appreciate you being on. I'm glad that you guys met at InsureTech Connect. Jackie, thanks for joining us today.
Thank you so much for having me. It was such a pleasure.
Yeah. And as always, Rob Galbraith, good to see you, buddy.
Absolutely, James. Another great episode. And I'm sure in episode 10,000, we'll be talking about the fallout from all the flooding.
It's gonna be the case. Of course, on my other podcast, Contact Crew, we talk about this all the time because all these construction companies are on the hook for all these buildings that are having issues in Florida. So it's a topic, it's a topic. That building collapse in South Florida, man, that did a number on insurance, financial services, and construction markets. So it's gonna be a perma topic. It's gonna keep coming up. Anyway, thank you for joining the InsureTech Geek podcast. It's all about technology that's transforming and disrupting the insurance world. I'm your host, James Benham. That's jamesbenham.com with co-host Rob Galbraith. That's endofinsurance.com. Big thanks to Jim Greenlee, our podcast producer, Kara Dalthadar, our creative producer, and thank you for joining us today. I look forward to talking with you soon. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. See you next week.